Hey friends, thanks for taking the time to tune in and join us here at SGT Report. We sure do appreciate it, and we hope everyone had a very healthy and happy Thanksgiving. On the line, someone we've spoken with at least once before, but it's been far too long, Amir Adnani, the founder and chairman of Brazil Resources and the founder and CEO of Uranium Energy Corp. And boy, do we have a lot to talk about today. Everything from the precious metals to mining costs to Fukushima. Amir, thanks so much for joining us.
It's great to be here. Thanks for getting together with me again.
Well, thank you. We know some CEOs out there, the Scottsdale Silver CEO, the folks over at Miles Franklin. I've talked to a few CEOs over the years, but you're the other one who's generous with his time, and I do appreciate it because I'm going to ask you some tough questions today. The first one, Amir, is there's been a great deal of talk that mining companies can't make money in this environment. In fact, it's even been said that the hard costs of mining 1 ounce of gold and particularly 1 ounce of silver is higher than current market prices for these metals, and many mining companies are losing money every single day that they operate. What are your thoughts on this? Is this the reality, or is that just puffery?
No, there's no doubt that when you look at mining across all commodities, and take whatever timeline you want, the last decade, the last 20 years. I mean, there's absolutely nothing refuting the fact that as we mine more minerals and metals out of the ground, we're doing it at higher costs due to the various components and inputs that go into mining, and all those costs, the cost of diesel, the cost of labor, the cost of material, all these things have been going through an inflationary environment and have been rising over the last, again, 10 years, 20 years, you name it. And in conjunction with that, you have the fact that as we mine the low-hanging fruits, the easy-to-get to high-grade projects, we've had to also go into lower-grade projects that are deeper. And so, again, this means that cost goes up. So there's no doubt that this is something that makes sense, it's happening, it's true, it's not puffery. And you can see it in gold, you can see it in uranium. At least those are the two commodities that I'm the closest to. But at the end of the day, what you control as a company is how you position yourself for any commodity when you mine it on the cost curve. When you consider that for every commodity there's a cost curve, the cost of pulling that commodity out of the ground. And as you think about developing projects, as you think about exploring for projects, the types of deposits, the locations, the method of mining, these are all decisions that companies and management can make consciously and ask themselves, where in the cost curve do I want to be? And if you can position yourself to be in the lowest quartiles of cost for any commodity, ultimately that's the only way to protect downside and keep margins and make money for the shareholders.
Well, let me ask you this, as it relates to mining stocks in general, making the case for just about any precious metal mining stocks in this environment is literally, I think, one of the most contrarian conversations two people can have, because it's just been an absolutely brutal environment. I still have exposure to mining stocks. Others that I speak to, pundits like Andy Hoffman at Miles Franklin, he's made the case for a long time to get out of paper stocks in general. Meanwhile, we see the stock market literally hit new highs. The indexes hit new highs almost on a daily basis, and it's just been very, very frustrating, and it's literally been a nightmare for owners of precious metal stocks. What possible rationale do you think there can be for making an investment? What's the best case for making an investment in the mining sector at this point, given all the pain that we've all suffered, anyone who's been invested in these stocks?
It's definitely been painful and frustrating. And when I say that, I'm saying it really as a shareholder myself and having a lot of equity in the game, at least in both companies that I'm directly involved with Uranium Energy and Brazil Resources. And I mean, in both companies, I'm amongst one of the largest shareholders, clearly have skin in the game and have felt the pain year to date and even longer than that over the last couple of years. But I would say that what is so predictable in the commodity business, you look at, for example, the TSX Venture Exchange Index, going back to the days where it was called something else like this, the Canadian Stock Exchange and the Vancouver Stock Exchange. You go back over 20, 30 years is what I'm trying to say. And this business of junior mining and just mining stocks in general are so predictably cyclical. And the down markets never last forever. The up markets don't last forever. But the cycles are so necessary for create and create opportunities. And you can really create value. And I think that the real value is created when the market is down and when it's tough to compete for capital. There's real consolidation, and that's where the real opportunity is. And so, my thoughts are, and again, we're kind of putting money where my mouth is and where the companies are active. You look at uranium energy, for example. In 2009, we were able to buy assets in South Texas that, in essence, became the heart of our mining operations today. And in 2009, no one cared about uranium, and we bought basically for cents on the dollar a brand new processing plant and properties that, again, today we're producing from. When you look at post Fukushima, what's happened in the uranium sector, it's been a bloodbath over the last 2.5 years. And again, I've gone out and we've been shopping. We've made 6 acquisitions over the last 2.5 years. Our in-ground resources have gone from 36 million pounds in the ground to almost 90 million pounds in the ground without taking on any exploration risk. All the exploration risk was already taken by someone else. Markets turned south, and it became a good opportunity to buy things for companies that have staying power and the ability to access capital and the ability to show that they understand consolidation. Same thing with Brazil Resources. With Brazil Resources, we've gone from no compliant resources in the ground in 2011 when we IPO'd, and today we just closed on our last acquisition that brings our total in-ground resources in all categories to just under 4 million ounces. This is remarkable. I mean, I just can't stress that enough, because with so much blood on the street, with so many companies basically not having the ability to raise capital or needing to simply shut down, unique windows that open up. And when they're open, for me as an entrepreneur, as someone who's building companies, these downturns, and again, the shareholder in me says, geez, it's been tough. But the entrepreneur in me says, we need these down cycles. We need these periods like we've had year to date, or like we've had over the last 2 years, because these are the windows where the opportunities are there, where you can really substantially grow your company. You can acquire things, projects, assets, equipment for cents on the dollar, ounces in the ground for less than $10 an ounce in the ground. You couldn't give me, if I gave you $10 million today or $15 million and said, go find me a couple of million ounces and put an economic report on it, you couldn't do that for $10 to $15 million. But right now, for $10 to $15 million or less, you can buy ounces in the ground with proven economics. And this just gets me excited. And to me, as an entrepreneur, as someone who's trying to create value for my shareholders, I see this as a very necessary stage of the cycle. I see this as a stage of the cycle that you need to take advantage of. And I've been very busy for the last 2.5 years in both uranium energy and Brazil Resources, making deals, making acquisitions, and being able to point to these deals to demonstrate value for my shareholders. And frankly, Sean, by doing that, we've attracted interest from shareholders. We haven't taken a total beating in the market like other companies may have had. And we managed to continue to keep our investors interested, raise capital, and continue to get deals done. So it's scary out there, but I see it as just a huge opportunity, and I'm doing something about it.
Well, yeah, that's actually what you want to see out of a CEO. I mean, you guys are on the hunt for acquisitions as opposed to being on the hunt to be acquired, and I guess that is the sign of a survivor. I mean, with the Huey at a near 52-week low, it just continues to amaze me that those of us that have been invested in mining stocks, and I should, in the interest of full disclosure, I own none of the stock in either of your companies, Amir, but I do own other paper mining stocks, and I've just had the wind kicked out of me here along with everybody else. And It just amazes me that in an environment where, again, we see the stock market indexes hit new highs every single day and the Huey is at a 52-week low. If you had to explain to a layman, how in the world can you explain silver being priced 50% plus lower than its 1980 nominal high of $50 an ounce, and how in the world do you explain $1,200 gold in a world where every single government is printing as much fiat currency hand over fist just as fast as they can run the proverbial printing presses? How in the heck do you explain these prices?
There's really no explanation other than the fact that you really have, as always, and will always be the case. We don't operate in perfectly efficient markets, and we get these disconnects every once in a while in various sectors and various themes and various commodities. This is just about as great of a disconnect as I've ever seen. I mean, with cash and paper money basically falling in value, you got the debasement of currencies as the theme of this generation. The fact that QE is tapering is just such nonsense when you consider that governments are still aggressively printing more money and are carrying so much debt. This is the disconnect of almost of a lifetime. And nothing about, when you think about the themes, when you think about the overarching themes that have been driving the commodities market over the last decade, the themes around record population numbers in the world today, and you're talking about record population growth across emerging markets, the demand for the basic goods and physical goods that you and I in the West have enjoyed for decades, now becoming basically the norm that everyone, that basically 3/4 of the world's population wants, that hasn't had. These are themes that haven't gone away. When you talk about bulk commodities and energy sector, when you talk about gold, precious metals, silver, none of the overarching themes that have been the key drivers have changed, and hence year to date we're seeing this incredible disconnect. And to me, again, it's nothing but an opportunity and nothing more than giving me the conviction that it is about the cyclicalities, it is about the disconnects. And again, those create incredible opportunities, and you got to do something with it.
Yeah, and a lot of people are. This next question I have for you is regarding the U.S. Mint, because the U.S. Mint has reported all-time record sales months just about every month this year for American Silver Eagles, and it's on track for an all-time record this year in total sales. Clearly, real-world demand for physical metals is quantifiable, and it's high. People really want the metals. People are buying the metals. And I guess I'd want to ask you this. What other quantifiable demand have you seen, Amir, for physical gold? Is there any other way that you can quantify for us what the demand is, the real-world demand, for the physical stuff?
For the physical stuff, I mean, I think, to some extent you've touched on it, but I'm just kind of thinking about anecdotal thoughts and observations, because as part of running publicly listed mining companies, you get to travel to just various parts of the world, and when just physically being in places like Dubai and Abu Dhabi, where we have a number of shareholders and have been there for a number of years talking to investors, and I was there recently. I would say that you have this almost cultural. I mean, the funny thing is that it seems like we've kind of come to mistrust our government and our politicians, over the last decade, or in recent times. But there's this almost like 1,000-year-old mistrust in the Middle East for people in power and governments. And so I just think that when I'm in parts of the world like the Middle East, or when I'm in Hong Kong, or in places like Singapore, and you talk to family offices and money managers, or just individuals that are that have really created significant wealth for themselves and their families, and are thinking about protecting it, I'm just baffled at the fact that all they talk about are the physical side of things, physical gold, physical precious metals, anything that's tangible. And that's something that you can you see, and you talk to people, and you can get it, and you can understand the concerns that they have. And so I think the appeal is so strong, and we can quantify it in so many ways, and you get all the reports and stats. But I think just kind of the anecdotal observations as well very much support the same theme. Same for mineral value and metals in the ground. I mean, the same thing. We're talking about gold in the ground, silver in the ground. There's also demand for that because it's part of the whole, let's say, diversification strategy. When you think about how are all the different ways I can hold this stuff, the real aggressive investors are looking at it really from a multifaceted approach and going after exposure on all these things.
Yeah, it's interesting. I sit here and listen to you, and what occurs to me, it's interesting because, we've seen so much inflation in certain key areas of the economy. The stock market, massive inflation, in my opinion, in these stock prices. The collectible car market on the high end is doing very well. Artwork, reaching new records for world-class artwork. Bitcoin, this thing has gone from $9 to about $1,000 in less than a year. And where's the one place we don't see massive signs of inflation is in the real money. Silver in physical form and gold in physical form. It leaves me speechless, and we don't have to talk about the manipulation of the metals here, but doesn't that surprise you that the one real key benchmark of inflation and hyperinflation is the one thing we can point to that really is in a deflationary economy, and that's the prices of gold and silver?
It just makes you laugh.
Yeah.
And it makes me laugh. Well, there's no doubt about it. I mean, it's the silliest thing of all time, and who would have if you and I sat back, 10 years ago and explained the market environment that we're in today, we would definitely not have, assessed that the precious metal prices this year would have done, performed the way they have, considering the backdrop of, again, what's going on with the currencies across, various major industries and countries, and just in general, what's going on with this unprecedented printing money sort of activity by the central banks. It's remarkable, and something's got to give, and at some point it will reconcile. And if it's not this year, it'll be next year. It's not a question of if, it's a question of when. And hence my point about the very almost predictable cyclicality in what we're talking about. To me, it's just very clear that the bargain hunting is when there's a real sale on. And right now, there's kind of like a buy one get one free sale going on in the junior resource space.
Yeah.
And again, it's just, to me, it's so obvious, and it's sort of ironic because there's always this instinct that we like to buy things that are on sale, right? So with the time of year we're in, and you can with all the sales coming up now leading up to the holiday season, the second any of the big stores puts on a big sale, we rush to purchase as much as we can. But we have one of the best sales I've seen in the junior resource space in the last 5 to 10 years. It's an incredible sale. But when we have a sale in a sector, people don't rush to it, actually. In fact, if anything, money rotates into the next thing that's hot, and it could be biotech and technology, which is the case right now. And that's why, as you say, it's so important to be a contrarian. And in my mind, it's critical to be looking for bargains when the sale is on. And we've got an incredible sale on right now in the junior resource space.
Well, I think with that in mind, too, again, full disclosure, I don't own any BRI, but I'd be remiss not to ask you, what's the best case for the future of Brazil resources, or the worst case? But what's your spin on what we're looking at here with BRI, as we literally are in one of the most horrible business environments for mining stocks and mining companies that maybe we've ever seen?
With Brazil Resources BRI, it really starts with positioning ourselves from the very beginning and having partners that can be supportive of the company's growth from a financial point of view. And that's the name of the game right now. If you've got financial staying power, if you've got the right capital structure, the right financial partners, shareholders, you may be able to outperform the peer group. You may be able to access capital when others can't. Those all become competitive advantages. And as a company, you can go shopping. All of these are exactly what has happened to our company. From day one, we had some unique relationships. One that I'll mention is a relationship we have with a Brazilian bank named Brazil Invest. And this is one of the oldest financial institutions in the country. And this group only has one investment in the mining sector, and that is their investment in our company, Brazil Resources, where they own over 10%. And the chairman of the bank, Mario Barnero, who's a very well-known Brazilian businessman, and lots about him you can look up on the internet. Sits on our board of directors, and along with management owning 30%, so you've got management with real skin in the game and able to stay involved and support the company financially. And lastly, a number of funds that have been supportive, namely the KCR fund, which owns about 15% of the company. And when you look at their insider filings, because they're over 10%, as recent as September of this year, they were buying stock in the open market. So when you add it all up, I want to say that before we get excited about rocks and resources in the ground, it's really about having the right composition of the right shareholders and the right financial partners. And Brazil Resources has that. And by having those components, we've managed to stay strong financially and translate that into acquisition opportunities that we've completed. And so, as I mentioned, we've gone from basically no 43-101 resources in the ground. And just a few days ago, we completed an acquisition of another company that now brings our total in-ground resources in all categories to just about 4 million ounces. And to me, that's exciting. I mean, to be able to grow that quickly. In 2 years, we've gone from 0 to 4 million ounces in the ground. And when you look at that and the ability to buy these ounces in a very strong mining jurisdiction, Brazil is a premier mining jurisdiction in the world with the right financial partners. To me, that's great. I mean, today we're trading at just around 65, 70 cents a share, which, Sean, is where we actually IPO'd 2 years ago. 2 years ago, we IPO'd at 65 cents a share, and we didn't have any compliant resources. And today we're hovering just around the same price, but we've got 4 million ounces of gold in the ground. So with that said, the plan is to continue to look for acquisition opportunities. And I think moving forward, we can execute on this the same way we have so far. And when there's such a big sale on out there, if you can be the consolidator, which I think our company is positioned to be, we'll be able to create a lot of shareholder value. I'm one of those shareholders myself. I'm one of the largest shareholders of the company. So clearly, we're thinking with value per share and creating more value per share in mind. And just the right time for this kind of strategy. Sean, if this was a hot market, if this was a market where companies were getting very attractive valuations and everyone could raise money, what I'm saying to you would not make sense. That would be the wrong strategy. But today, this is the right time and the right plan for the market we're in right now. And you look at a company like Yamana Gold today is a huge player, a multi-billion-dollar gold producer. People forget that an example like that company started out just 10 years ago and did the kind of strategy and executed the kind of strategy we're talking about. Consolidate during the downturn, build out your operations when the markets improve and there are better opportunities and financings available. And that was just 10 years ago. That company started with concept, and today it's a multi-billion-dollar gold producer. And I think that Brazil Resources can follow the same model. We've shown the ability to be able to execute thus far, and I think we can really continue with this. And I think it's the right time to do to carry out with this type of business model.
Well, I really do appreciate your candor here, so I'm going to put you on the spot with this one, Mr. Adnani. I mean, as the CEO of Uranium Energy Corp, I'm not sure if there's a better person. Certainly there's no one better to talk to that I know about this Fukushima situation. You must certainly have strong opinions on this subject. The environmental catastrophe resulting from the damage to the Fukushima Daiichi nuclear power station can't be overstated, and apparently there are no easy solutions to decommissioning that plant. And as a result, I think the opinion of people around the world is beginning to turn against nuclear power, despite the world's growing need for clean, cheap energy. So here's my two questions. First, what is your opinion on Fukushima and how TEPCO and the Japanese government have handled this disaster, this crisis? And second, in your opinion, what is the future for uranium and nuclear power in general?
It's a very heavy-duty question, right? There's just so much in that question, but I'm happy to dig into it, and let's start with the macro situation. So, I mean, when you look at nuclear power, clearly the nuclear power industry has had a very challenging moment here with the Fukushima Daiichi reactors and the earthquake and tsunami that basically really took those reactors offline. And of course, even more key than the challenge to the nuclear power industry has been, just the challenge to the people of that area and the people of Japan for what they've had to deal with, and on top of the fact that you had this unprecedented earthquake and tsunami that wiped out a lot of buildings, infrastructure, and caused billions of dollars of damages, not to mention the thousands of lives. So you boil it all down, you put it all in perspective, and the perspectives are, in my opinion, that we have to accept the fact that creating energy on a large-scale basis comes with risk. When you think about oil, when you think about having to dig and drill deeper for oil in tougher places like offshore, when you think about that environmental disaster that BP's problem became a few years ago off the Gulf Coast,
right.
It again just goes to show you that energy and the energy mix and how we generate enough energy for a record population in the world today. These are difficult questions, and no form of major energy power generation is without its problems. So I think here, when we put it all in perspective, we have to realize that nuclear power still owns a very clear place in the energy mix, and that it still is today the only form of energy generation that is truly CO2 free. It doesn't have emissions, and we should not forget about the issues around climate change, which is one of the main reasons why so many people from the environmental movements are now becoming big supporters of nuclear power. And no form of power generation has the quality to generate a lot of power on a large-scale basis, but without emissions. And nuclear does. And so because of that, you see nuclear power generation growth in China, primarily in China, in India and other emerging economies. Even in the US, there are now 4 reactors under construction at various stages. Oil-rich countries like Saudi Arabia, United Arab Emirates have announced major nuclear power plants to be built in those countries. And so a diversified energy mix will need to contain and include nuclear power for that baseload power generation. And so with that in mind, there is a reason why we have more nuclear reactors under construction in the world today, even after Fukushima, than ever in history. That's key, and you got to remember that. And that's why we still have about 400 reactors operating in the world. And when you add it all up, there could potentially be a doubling of the world nuclear capacity over the next 20 to 25 years. So yes, Fukushima has been a tremendous challenge for the people of Japan, for industrial development in Japan, and for the world and nuclear industry as a whole. But the industry's learned a whole lot from it. The Japanese government is making some really smart moves right now to take over. There's some proposals to take over the decommissioning of those Fukushima reactors and put the decommissioning into the hand of the Nuclear Regulatory Authority, leave TEPCO to be a utility, which is what it's good at, to generate power.
That's right.
And these are all things that in the ideal world, all of this would have happened a year ago, and I think the whole decommissioning could have been handled better if it was done by the government. But things are moving slower than I think everyone would want to see in Japan. But when it's all said and done, I think this is a question of really when, not if. I think Japan will turn reactors back online in that country. They're in their 3rd consecutive years of a trade deficit right now. And it's primarily driven by the fact that all the utilities in that country have had to shut their nuclear powers down, which was previously generating 1/3 of the country's electricity. And they've had to pay an arm and a leg importing fossil fuels, not to mention just ridiculous prices that they're paying for LNG that no one else in the world is paying but them, to replace these idle nuclear reactors. So when it's all said and done, I just don't see how Japan is going to come out of the economic recession that they're in and stimulate their economy and be a major force, which they were and aspire to be in terms of a major economic growth engine and a major export economy. You can't do any of those things without having competitive cheap, low-cost energy on your own soil, and nuclear provides that for the Japanese. So I just think this is, nuclear is always kind of a long-term picture. And when you look at it kind of long-term, it's going to play a major role in the energy mix, is what I'm trying to say. And I think you're going to see that drive the demand for uranium and subsequently higher uranium prices.
Assuming that nuclear power is going to be part of the world's energy picture for the next 100 years, let me ask you this. I'm just curious. We don't have to dwell on this, but I am curious to get your opinion on this. How do we make sure that it's safe? How do we keep companies accountable and responsible to the world's citizens and not just their shareholders? It seems outrageous to me that that plant wasn't upgraded, and it seems equally outrageous to me that so many of those spent fuel rods were stored on top of the reactor in the same building. It's just archaic, it's antiquated, and if we're going to have nuclear energy moving forward, it needs to be safe. What's your take on what I just said there?
You're absolutely right, and I don't think anyone in the nuclear industry would disagree with you. And there's no doubt that there were some archaic elements in the relationship between utilities and regulators in Japan. The situation with Fukushima really shed light on that. There were numerous reports that had been written by the regulators to TEPCO, Tokyo Electric Power, highlighting deficiencies at these Fukushima reactors that had to be dealt with, highlighting an array of issues that, frankly, had they been addressed, probably could have prepared those reactors far more efficiently. But yet the nuclear regulatory regime in Japan really didn't have teeth. And prior to what happened, and a lot has changed now. A lot has been there's been a major overhaul of the entire system in Japan, and the same happened in the United States when the 3 Mile Island incident happened, and after that there was a real thought and real planning that went into how the industry needs to operate with safety as number one priority. And today, after all these years, the U.S. nuclear industry, with just over 100 reactors operating in the country, has become the gold standard in the world for safety and efficiency, but safety coming first, and has had thousands of hours of operating track record under its belt now without any of those major accidents. And so it's very simple. Safety comes first. Regulatory agencies need to have teeth. They didn't in Japan. These incidents are, to some extent, you can say, healthy for becoming a wake-up call for everyone, and that's the only way to have it. And I think when you talk to people in the industry, they would say exactly the same thing.
Well, last question before I lose you, Amir. You've been good enough to answer some of my tough questions, so let me give you one. For anybody who's interested in making an investment in the uranium sector, first of all, let me just say, I'm not morally aligned against nuclear power just because of what happened here in Fukushima. Again, I think if it's safely run and regulations are followed and enforced, it can be a great source of energy, and the world needs energy. So that said, if it's not immoral to make an investment in the stocks or the companies that sell or market or dig uranium out of the ground, make the case for us for Uranium and Uranium Energy Corp, what you think the future of the company is and where it's currently priced.
Absolutely. So to begin with, again, from a macro point of view, you got to keep in mind that on a worldwide basis, there are 400 reactors operating right now. There are 68 reactors under construction and many more planned. So there's a real growth of the nuclear capacity. Right now, without any of the growth factored in, nuclear reactors are consuming about 180 million pounds of uranium each year, but supply from mines is actually about 135 million pounds. So even right now, without any growth, you've got a supply imbalance. But the uranium price is at an 8-year low, reason being what happened in Japan. So the situation in Japan has really created a short-term oversupply of uranium, because the Japanese reactors are really shut down and they're not consuming uranium, and some of the Japanese inventories are coming into the market. But if you believe that Japan will gradually turn reactors back online, which I do, and you've seen a number of utilities submit reactor restart applications to the government, Prime Minister Abiy is, him and his political party are pro-nuclear, so you see the political will is there to restart reactors. With this situation happening, with the reactors coming back online, the short-term oversupply that we have will reverse, and we're back to a situation where we have a supply imbalance in the market. This, I believe, will lead to higher uranium prices, and today's uranium price of $35 per pound is also quite inadequate to incentivize new mine construction. For new mine construction, a lot of reports that have come out demonstrate and show that we need uranium prices north of $80 per pound to see large-scale projects be viable. So with all of that as the backdrop, my company, Uranium Energy Corp, has positioned itself really as one of the lowest cost uranium producers, because we don't need hundreds of millions of dollars to build uranium mines. We built our first uranium mine in South Texas, a project called Palangana, for $10 million. These are numbers that are mind-boggling when you think about mining. I mean, when was the last time any of the other CEOs you've interviewed told you they built a mine for $10 million? So it's, the Solution Mining Project, which I encourage your audience and your listeners to they can visit our website, uraniumenergy.com. And we have a video animation that shows this very unique technology that we utilize, the in-situ recovery technology, that provides for incredibly low capital requirements to get into production, very low cash costs to operate mines. And so by utilizing this technology, we've positioned ourselves as a brand new producer of uranium in the world. We are able to work with the lower uranium prices, but at the same time, don't need to go out there and look for large financings to make our business work. We've managed to attract capital from some very good names in the business. When you think about people like Rick Rule, who's a very well-known natural resource investor, and Li Ka-shing, who's the richest man in Asia. Rick Rule's company, Sprott Asset Management, and Li Ka-shing, through one of his holding companies, have recently invested in Uranium Energy Corp, which in my mind is a huge vote of confidence for what we're doing. And so with Uranium Energy, it's really, today you can say a classic contrarian play. Is contrarian because of what happened in Japan, because of the fact that uranium prices are an 8-year low. But I think if you can get involved with the right companies that demonstrate that they've got capital, they've got the right backers behind them financially, they've got a technology or a way to extract uranium that puts them on the low end of the cost curve, so you're ahead of everyone else. We have all of those components. We can find companies like that. I think that's the way to play the sector. And you can learn more about everything I just told you at uraniumenergy.com. There's lots of information to look at when you go there.
Yes, and maybe you could just shout out for us the tickers. Brazil Resources is BRI, and what is the Uranium Energy Corp ticker?
Yeah, so Uranium Energy Corp trades in the U.S. market on the NYSE market with the ticker UEC for Uranium Energy Corp, and Brazil Resources trades on the TSX Venture with the ticker BRI for Brazil Resources Inc., and in the U.S. on the OTCQX market with the ticker BRIZF, and it's BrazilResources.com for the website of that company.
Well, very good. Amir Adnani, the founder and chairman of Brazil Resources and the founder and CEO of Uranium Energy Corp. We do appreciate your time and your expertise. This is an area worth exploring, and many of our listeners appreciate it.
It was great to spend time with you, and thanks.
Okay, thank you so much for your time, and have a great night.
Okay, you too. Bye.
Bye.